I'm Dave Mecklenburg from Tradestation Trading. Today we're going to talk about the two-period RSI strategy. But before we can do, I remind you how to do your risk in trading. When trading for more than one day, that you can and will lose money trading. Only trade with money you can afford to lose. Hey, if you're new to the site, I've been doing this for over 19 years at this point. I started this website over 17 years ago. I want to say it went up in December 2004. I do free stuff, been doing free content the whole time, ad supported. So just want to let you know that there's ads on the website, in the newsletter. I usually, the ads go with content, so they're in there. You click those ads, that's what supports the site. Again, I can't tell you to click ads and commit ad fraud. But just know that when you click those ads, that's what pays for the site. I don't have any one-click ads too. I want to emphasize that. I know some of these emailers, you click the ad and all of a sudden it adds you to a list. We don't do any of that stuff here, so feel free to click anything. If you hate the ad, well, the upside is that by you clicking that ad, that person paid for that click, whether or not you want to support the advertiser or not. So I do a variety of content, have some expertise in a few things, but I do have something for everybody. I have guests and guest content, guest webinars, guest videos. So I have something for you if you want to stick around on the newsletter. All right, so hey, the context of this lesson, any lesson of mine, any guest of mine, trading's hard. All right, I know everyone, on social media, whatnot, is telling you how easy it is. If you just do these simple things, you'll make a ton of money. Of course, that's not true. If it was easy, everyone would do it. If you accept that trading's hard, if you're not going to be naive, you'll get along much better trading. Corollary to that is no one sells money printing machines. There's nothing someone can sell you that'll magically help you trade profitably. I don't sell stuff, but I do have advertisers and I do have guests who sell stuff, and none of their stuff is going to help you print money or decide how much money you want to make each day. That's generally a sure sign of a scam artist asking you how much money you want to make. All right, it's not how it works. And of course, I do free stuff, and nothing I give away for free, which I would argue is more valuable than some of the things people are selling. Can't print money with it. All right, so I'm going to give you a good idea. You're going to have to investigate it further. Sometimes I have complete strategies. I do have a complete strategy here, but you're still going to have to investigate it further based on your particular situation, your needs, your available time, your level of skill. We're all in a different place here. And you should be investigating stuff further. You should assume anything someone shows you, teaches you, doesn't actually work. And then you investigating it, you tweaking it for your particular situation. Again, level of risk, account size, things that I can't control will help you see if it'll work for you. So then what we're gonna do that is put in the reps. You gotta put in the reps. How do you get stronger? You gotta go to the gym, put in the reps. How do you get faster? You gotta get on the road, get the reps in. Same with trading, any professional skill. People don't read a book and magically they're a CPA. All right, so you don't wanna put in the reps on this strategy, I guess the strategy is just not a match for you. If you don't want to put in any reps, I guess trading really isn't for you. And it's not for everybody. And hopefully, hey, the more time you spend with me, view my content, view my guests, hopefully I can help you sniff out nonsense, things you shouldn't be wasting your time on. All right, let's get into the actual lesson here. Again, I do appreciate you guys coming, appreciate you supporting the advertisers on the website, in the newsletters. with your clicks. So the initial RSI indicator has how it was initially presented to the world. There's a couple settings on here, and I can show you how you can change the settings in most software. But the length is 14. This is on daily bars. It was traded off daily bars. Overbought was 70, meaning that, hey, that uptrend's likely to end. And oversold was 30, the downtrend likely to end. And then the exits were something less than the opposite. So, hey, your stock is oversold at 30, you go long and you're going to exit somewhere around 65, just less of 70. Hey, RSI is at 70, so you're going to sell short at 70 and then hold it to about 35. Again, I'll have the recording for all you guys too, so if you're missing something, no worries, it'll be in the recording. So here's a article from Stocks Commodities Magazine. I can show you where you guys can get that too. If you got an advertiser, if you have a subscription, you have access to the full archives. This is, does RSI give you an edge? This is where I'm getting the idea from. Larry Connors is my old boss, 18 years ago when I was working for him. But he had a different way of doing RSI, and hopefully this presentation will give you a couple ideas for you to investigate and play with. So in this case, it was RSI2. So, and this is straight from the article. So again, we're going to change the settings. Instead of a length of 14, the length is 2 period RSI on the dailies. Overbought was 98 instead of 70, and oversold was 2 instead of 30. And the back-tested system here was entries on the market close. So theoretically, you're running your scan as the market's closing. If you can scan the whole universe of stocks quickly, and then buy at the close, and then exit 5 trading days later, 1 week. All right, so by entry at the market at the close and exiting 5 days later at the close, of course, that makes a back test easier, right? You just use the closing price on day 0, closing price day 5. And that's why they do that. And I know the back test was based upon, well, how many holding days? So 1 day, 2 days, 3 days, 4 days, 5 days. I also know that in general, Larry Connors was biased towards kind of the 1 week holding period. I'd also say, well, look, if you want big winners, that's generally a function of time. The longer the holding period, the greater the chance of bigger winners. And it would make sense that a 5-day holding period beats a 1-day holding period in something like this. Now, so again, the results were, hey, obviously this 2-period RSI holding for 5 days just beat randomly buying stocks at the close. So when they backtested this on 8 million trades from 1995 to 2006, and this was published in November 2007 Stocks Commodities Magazine. Okay, I'll show you where that is at the end. And then they also use a 200-day moving average to improve the results. This was kind of an update, but improve the results. So basically, you're in a trend. So you're only going to go long if you're above the 200-day moving average. You're only going to go short if you're below the 200-day moving average. Essentially, you're in the long-term trend here. Stock sold off, it's oversold, but you're still above the 200-day moving average. You're still in the major trend. Go long. Makes sense too. Makes perfect sense for probably a lot of things you've heard. What's the overall trend? Hey, if you want to run this scan, so I use both Metastock and Tradestation. So just Tradestation briefly, this is how you would do a scan. You could stop the recording if you used Metastock, and I'll just read this to you in English based on the code. So RSI C is close. You can spell out close like I did below, or just do C2, RSI C2, close 2, under 2, less than 2. And I like to use the universe of stocks here. You could use a different universe of stocks, but this is generally what I do, is between 20 and 120 bucks. And then the average, the 10-day average volume, so moving volume, V for volume, 10, S for simple, above 500,000. So these are liquid stocks. Generally, getting above 1 million, even 2 million would be really liquid, but depends how big of a universe you want. So just showing you 20 to 120, 10-day volume above 500,000. That's what it says. And again, like we said, that filter, the close, that's the closing price, is above moving close 200 simple. It's above the 200-day moving average. That's what that all says, right? So the opposite for the short is that 2-period RSI close 2 is above 98. Same universe of stocks between 20 and 120, 500,000 average daily volume of shares sold, and then the close is below that moving average. That's all it says. Tradestation, so I gotta have open right now. Same thing going on here. You can't do a long and short in the same scan like this. Tradestation, or at least I'm not sure how to do it. So I don't think you can. You have to have separate ones because you have separate criteria here. But if we were to click on this plus sign here, we would see that it would give us the length, and we type in 2, it would show 2. So 2, under 2. So this is just the long side. You know that the 2 would be above 98 for the short side. Again, the close, same universe of stocks between 20 and 120. The 10-day average volume, 500,000, same universe of stocks. And then this moving average line, this is an indicator. Again, if we were to click on that 200, you'd see that it allowed me to type in 200 for the moving average that I want. So our close is above the 200-day moving average. Exact same scan, right? If this was the short, it'd be greater than 98 and then less than the 200-period moving average. All right, so hey, what are the issues with this strategy? Well, you're in the business of catching tops and bottoms. That's generally a loser's game in trading, trying to guess the top is in or guess that the bottom is in. So market sells off, or a big powerful sell-off. All these stocks pop, they're under 2, and then you're going to buy. It's kind of called catching falling knives, right? So if you're catching falling knives, generally your losers are bigger than your winners. You're not controlling the risk, right? If the market sells off, hundreds of stocks are now popping on the long side, all below 2, nothing on the short side. Can't offset your risk here. So you're not really doing a good job of controlling risk. Also, there are no stops in this too, right? You were buying at the close and just holding for 5 days. No mention of stop on that one. Obviously, you can't trade every signal, but there was 8 million trades over 12 years. So 600 to 700,000 trades a year. Obviously, you're not going to do. Exits weren't based on any technicals, it's purely time. Now, they did update the strategy. I know after the fact, it wasn't published in this, but saw what happened, kind of using those classic exits. Okay, well, what happened if you exit when RSI hit 65 on the long side and 35 on the short side? Seemed to work better, but I don't have the results of that. And then obviously it's a lagging indicator here. And we'll go a little bit into what a lagging or leading indicator is. Most people would say, well, it's a derivative price. All indicators are lagging indicators. So I'll talk about these indicators in a second. But these are the 8 things I think about to a good trading strategy. So like, how can I improve this strategy if I use my principles here? Keys to a trading strategy. Control our risk. Think about the downside before you think about the upside. A stop is an obvious way of doing that, which this didn't have, but there's other ways you can do that. You could buy an option. You could do a basket of long and short. But you got to control your risk. You got to control your costs. Commission's the most obvious here. Again, 600,000 trades, probably going to lose all your money to commissions on that. But I consider wide spreads and slips to be a cost. If you can't get a good fill, if you got a small edge and you're giving it all away on that slip or the wide spread, that's a cost here as well. Simple is always better than complex. The higher the complexity, the higher the likelihood of errors. Range, volatility, whatever we're trading needs to move. So I like to focus in on the S&P 500 stocks. They've got volume and they move every day. Right? If you're looking at something that moves 5 cents every day, I don't know where you're going to make money on that. Heard the trend is your friend. Want to be with the overall trend. Now this system actually did have a trend filter, right? You were above or below the 200-day moving average. So that was actually in this. And then momentum, right? You want that trend to be either speeding up or resuming. So this didn't have it, right? It had the opposite of momentum. You were buying at it as it was crashing or as it was exploding up, or you were selling short as it was exploding up, right? As you got those readings of less than 2 and over 98, right? And I'll show you how to have momentum on your side. We trade a different way. Confluence of leading indicators. So this is what I was talking about. It's a lagging indicator, right? Well, they're all lagging indicators. But the difference between something being leading or lagging, in my mind, is do you know your entry and exit when you take the trade? Now, in some ways, we kind of do we know our entry and exit when we took the trade based on time. Okay, enter at the close, we get the reading, and then 5 days later. But do we know the price at which we're going to buy and sell? So that's really the key here. So I consider a leading indicator anything that tells me my price when I buy and sell ahead of time. So these would be indicators that print across the price charts. All right, we'll see when I pull up my charts that RSI is a prints below the price chart. So it doesn't print across the price chart. If I'm exiting at 65, I have no idea what that price is. Like I'm waiting for this to tick to 63, 64, 65. I don't know what that price is. I want to know what the price is for a leading indicator. Well, what are some leading indicators to tell us our price levels? Well, things that print across the price charts. Well, major moving averages print across the price charts. Floor trader pivots, Fibonacci extensions, retracements, trend lines, even better, recent highs and lows, today's high, today's low, yesterday's high, yesterday's low. Those are leading indicators. And then a confluence is, hey, 2 or more of those indicators line up. And last, hey, our target's significantly larger than our stops. So as a typical trader, we're going to be right about 50% of the time. If you're new to trading, I know you're going to spend a couple months, maybe even a couple years thinking you're going to come up with a system that's right 80, 90% of the time. Now, some option selling stuff very well should be right 80% of the time or so. But of course, your losers are going to be much, much bigger than your winners. But in general, if we have a balanced trading strategy, same rules, only opposite long and short, we're going to be right about 50% of the time. So how do we make money? It's because our winners are bigger than our losers. Easier said than done. We're wired to do the opposite. We're wired to hold on to our losers. It's not a loser until you close the position. So if I just hold on to it, it'll come back to break even and I can exit. The problem is losers become even bigger losers. We're also wired to lock in those gains a little early. Hey, if it comes back to break even, I'll give up all my winning. So I'll take it off now. But the problem is that winners become even bigger winners. So you have to train yourself to cut your losers once you're outside of normal volatility and train yourself to ride your winners to even bigger wins. It's been easier said than done. You have to also train yourself to accept the fact you're going to be right about 50% of the time. Hey, if you're right 52% of the time, that's a pretty decent edge, right? But if you're about 50% of the time, right, we're wired to want to be right. We like being right. So these are all things that almost every trader struggles with. And that gets back to what I talked about, getting in your reps. It's going to take a lot of reps for you to accept the fact that you're going to be right about 50%, you're going to be right about 50% of the time. It's going to take a lot of reps for you to feel comfortable cutting your losers and riding your winners. All right, so here's 3 ways to trade it. We'll spend most of the time on the last one. But number 1, you could just buy a basket of long and short. All right, so how big is your account? How many stocks can you do? Okay, you can do 4 stocks. So you can buy 2 and short 2. And then you've kind of protected yourself. You got a bigger account, you could do 4. You can go long on 4, offset it with 4 shorts. Something weird happens overnight. Something happens over the weekend. Well, you're protected with half your positions. Strategy 2, divergence. So there's a variety of ways of doing divergence. A lot of people like divergence to trade indicators. And so this is one way to do it, how I would do it. So here's your signal, and here's the bar where it signals. So what I would do is just ignore the first signal and then wait for a better price. We first get a better price here perhaps, and then no signal. Now what I would do is I like momentum. This is how I'm also going to do the second strategy is when it breaks the high of this new bar, that's the trigger. All right. Well, it didn't break the high. In fact, we got a better price. Great. Even better, got a better price. So now when we break the high of this bar, we can enter the trade. Now in this case, the next bar didn't break it. So maybe your rules are it has to break in the next bar. If it doesn't, no trade. Or if you're okay, waiting a bar, breaks, enter the trade. We also got this nice confluence of the 50-day moving average as well, sitting on top for some support here. But not really the point of this. I was just pointing out a confluence of leading indicators. The low sitting on a 50-day moving average. So again, divergence is ignore the signal, get a better price, then take the trade. Get a better price without a signal. All right. Get another example here. Here's our signal, ignore it, get a better price. No signal. Oh, got an even better price. No signal, breaks the high, enter the trade. All right. This is our no signal there. All right, but how would I do this? I would just make it even simpler. Let's just trade it like a pullback. All right, here's your signal. If it breaks the high of that signal bar, enter the trade. All right, let's just quickly review pullbacks kind of by the book. Obviously trending stock, a pullback. Some of these are nicer than others. Oh, I got 4 down bars. If it breaks the high of that last pullback bar, triggers the trade. Hey, makes another low, great, got a better price. So again, the last pullback bar. If it breaks the high, that triggers the trade. Stop on the backside. In this case, we got a little consolidation here, but that's a little close, probably on this pullback low, which puts us on the backside of the 50. So that's a good pullback, right? Again, trending stock, 3-day pullback, break the high of the last pullback bar, maybe stop on the backside of the 50, depending on how much space we want. Again, trending stock, recent high, break the high of the last pullback bar. Same thing going on here. Hey, here's an inside day, but that's okay. I don't care. Doesn't have to be a perfect pullback of lower lows, lower highs, lower closes. Nice little pullback there. Gives us a trade. Here's one that would have triggered. Here's why I kind of don't do like 200-day highs. Sometimes you get these things that roll over and roll back up. So see where the 200-day moving average is above the 50 here. This is still obviously trending stock. Again, should be obviously trending. 5-year-old child will tell you this chart is going up, right? So here's your 3-day pullback, break the high, trigger the trade right here. Maybe stop on the backside of the 200 in this case. Downside, same rules, only opposite. obviously downtrending, recent low, break the low of this last pullback bar, trigger a trade. Hey, went higher, great. Got a better price, break the low of that next bar. Maybe stop on the backside of this pullback or backside of the 50. Here's one that would have already triggered, obviously downtrending stock. Here's your recent low, 3-day pullback. Break the low of that last pullback bar, triggers the trade there. All right, maybe stock on the backside of the pullback or backside of the 50. All right, so that's how you do a pullback. And so we can do this with RSI. We're not going to get as nice looking pullbacks, by the way, of all these red bars in a row, but here's our example. Breaks the high of that bar, triggers the trade. Maybe stop on the backside of that 200. So again, they don't look spectacular. There's signal here. All right, we went down. This is actually kind of a more classic pullback here, but we didn't actually have a signal. So came back up, now we have a signal. Break the high of that last pullback bar to trigger a trade. Maybe stop on the backside. I like to try and stay in these trades as long as the trend continues, right? Once we get a little bit of space, maybe move it to break even, stay above the 50, and then maybe stay above the 200. All right, here's our signal. Again, signal here. So break the high of that last pullback bar. Downside, same rules, only opposite. Break the low, this last pullback bar to trigger the trade. Now, stop on the backside, perhaps. Backside of the 200. And I like to try and get inside some maybe 52-week lows. So here, it's not so obvious where that is. When we look at some today's charts, we can look. But I feel like, so long side, I'm looking to stay in the trend. Short side, obviously we can't hold indefinitely, but try to get inside 52-week lows. So a little bit higher than those 52-week lows. All right, again, same thing, break the low, trigger a trade, get inside those 52-week lows. Stop on the backside, right? Break the low, pullback bar, get inside those 52-week lows for your target, right? Stop on the backside. Same thing going on. Again, trade it like a pullback, pretty simple. And here's an example. Here's where your signal hit, right? Break the high, bar didn't break the high, no trade, right? Here's our signals kind of coming here, kept climbing higher, never triggered, no trade, right? Never broke the low of the last pullback bar, so we don't take a trade. We don't catch that falling knife, right? Looks like this is signals hitting for a couple of days, but it kept going higher. Hey, great, either we got a better price or we didn't catch the falling knife. All right, so that's kind of to the point here, our 30-minute lesson. So the couple takeaways here, the RSI, it's just a simple way to scan for pullbacks. You know, scanning for pullbacks can be tough, building a scan for pullbacks, because I do have pullbacks, scans for pullbacks, but you still need to end up flipping charts. RSI2, you don't really need to flip the charts. You know, if you trade like a pullback or use a confirmation bar where it's going in your direction, meaning you have momentum on your side, right? It's going to break the high of that last pullback bar on the long side. So it's going in your direction, you have momentum, you don't catch those falling knives. Long side, I think it's a good way to trade this is looking for long-term holdings. So just try and stay in as long as possible, catch the big winner if you can by staying in the trade, if you're on the trend. And then in short side, I try to target inside those 52-week lows. And then some ideas for you guys to pursue or think about. If you want to flip some charts, you want to do some extra on this strategy, if it worked for you, hey, our different settings work better for you. right? We know the default settings were 14, 30, 70. For this, it was 2, 2, 98. Play around with that on the settings. Maybe something else will work for you. My buddy Art Collins, who back tests stuff, I had an RSI system that I put out on the list a couple of weeks ago. I'll show you if you want to join Art's research list. So he had totally different settings. All right, what's the optimal holding period? Again, the initial thing was 5 days. I know they back tested 1 through 5 days. I think holding this stuff for many months is probably a better way of doing it, but maybe you can find out if you want to trade this with options and you want a 2-week holding period. Maybe you can find something that works for you. Hey, can you back test your idea? Like I said, my buddy Art Collins, I'll put out his research for you guys every once in a while. I'm going to show you how to join his list. But you know, he back tests everything. And if you have an idea, if you can back test it, even better. Otherwise, you're going to have to flip charts and write stuff down in your notebook. Hey, and are there any other variables you can add without over optimizing? Meaning you added enough variables where there's not enough trades too. So the more variables you add, the fewer things we can, or will we have a significant enough population or sample size here. So maybe there are some variables that'll work for that. And then, hey, what other markets will this work with? We just pretty much did this on stocks. Art's back tests are almost always on E-mini futures, but where else will this work? All right, hey, that's the lesson here. I want to show you, I post these on the website. So the RSI pullbacks, that's the scan I put out every day. So market's been pushing up here, not really anything on the long side as stocks push up. I just have some short side stuff for the last couple of days. So we can look at that, but we got to go back to like the 14th, 15th, and 16th for some long side setups. And I'm going to show you that or what happened there. This is the article on stocks commodities. Does RSI give you an edge? Right there. You can go to traders.com if you've got a subscription to Stocks and Commodities magazine and go get this article or any of them. Again, this is where I put a variety of strategies on the website. So learn a backtest of the Doji system. That's Art. If you want to join his list, it's right there on the homepage. So you can get at least 1 or 2 systems every week. I also have another list that I keep that trades strategies, 2 strategies daily. You can join that list here. So learn to trade, just putting in the reps every day with my strategies here. All right, some of these are ads. Again, I make money when you guys click on the ads, but don't click stuff you're not interested in. All right, and then let's look at, so we just really have short side stuff here. You can see how I have a signal here. And again, trade like a pullback. I try to get inside of a 50-week low. I'm pushing this out, so sometimes we just don't have anything here. And so maybe you don't want to take this trade. There's just nothing, you know, to get inside of, or it's not enough room. If the stock is low priced and there just isn't anything below to target. All right. So some of these don't really have great targets. This one, so here's targeting these lows down here. But again, we have a low price stock. Is it really going to go down to $4 or $5? Don't know. GameStop is a weird stock. It just showed up on the scan. I don't know if I'd want to trade that. Western Union try to target these lows. Sometimes the target just isn't far enough to take the trade though. All right. Hey, and these are some stocks. So where I had signals maybe 2 weeks ago, right? You can actually see where they kind of caught these bottoms, right? Here's our signal. We bought at the close. Some of these actually did pretty well, right? We can see our signal was right here. Went a little lower the next day, probably in the black. There's Fox. Again, these sell-offs, sometimes they do pop at the right time. Signal here. Looks like this moved 10 bucks since the close of the signal. All right, so all these from about 2 weeks ago have actually done pretty well. I think the first one was maybe a little break even. This one's not so spectacular, but it's up about $1. I guess Tyson here is just barely up, but all the other ones look pretty good. All right, let me know if you have any questions about this strategy or anything else on trading. Stick around and answer your questions. I'm going to stop the recording though.